Hey folks, Dan Frio here, the rate update. Today we're going to talk about what mortgage rates are doing and why. And I also have some great input from CNBC's financial editor and what she has to say about mortgage rates today, tomorrow, and in the next couple months. Don't go away. Okay, so it's basically a quiet day here, or it should be, with mortgage rates. And the reason why is there's no economic data today. So there was really nothing to spur the market other than the 10-year Treasury took a move to the upside. And we always say, I say this a lot, I said, the Fed doesn't control mortgage rates, nor does the 10-year Treasury. However, a 10-year Treasury is a bond that is in competition with the MBS market. But let's see what CNBC financial editor has to say, and then we're going to discuss mortgage rates in detail next.
Welcome back. Personal finance editor Jana Herron is here for today's Your Money segment. And mortgage rates are sliding to their lowest levels since winter. Jana, tell us more about that.
Yeah, so the 30-year fixed mortgage, which is the most popular home loan, decreased to 2.9%, and that is the lowest rate since February 18th. So that's at the start of the home buying season. And the reason mortgage rates are falling is because they're following the yield on the 10-year Treasury, which also fell based on economic concerns and expectation for the Fed's next move on rates.
So, Jana, what does this mean if you are a homeowner? Is this a good opportunity for you to refinance your existing home loan?
Absolutely. If you haven't already done so, you should go and refinance. And there are about 13.9 million homeowners who can shave 75 basis points off of their current rate and save about almost $300 a month off their mortgage payment. So that's a really great opportunity if you already own a home. If you're a home buyer, things are a little bit more difficult, partly because the housing market is not very normal right now. We have a shortage of homes for sale, so people are bidding up prices. And so any break that you get from these low mortgage rates have been erased because of those higher home prices.
Yeah, I was just wondering about that because we've just seen such a hot real estate market. And some of those prices are just absolutely insane right now, of course, fueled by those lower mortgage rates. Just where are rates going to go? If we had to have you pull out your crystal ball right now, where do you see them going in the future?
The experts that I've talked to say, for the rest of this summer, rates will stay right around 2.93%. They'll bounce up, they'll bounce down, but it's still going to be a great rate. I don't think we're going to see new all-time lows, which we saw in January when rates got down to 2.65%, unless something really terrible happens in the economy and growth looks like it's not going to happen. So the rates are going to stay really low. I mean, under 3%, at 3%, you can't get a better deal.
All right, absolutely. And if you are a homeowner, make sure you take advantage. If you are a home buyer, hopefully you've got a lot of cash out there to beat off some of those other bidders in this really competitive market. Yahoo Finance personal finance editor Jana Herron, thank you so much for breaking all of that down for us.
Okay, so I couldn't have said it better myself. So let's go to the headlines in the news, and then we're going to kind of dissect what's happening today and what I foresee myself in the days to come. So we go to the headlines. Today's mortgage rates for July 9th, 2021, mortgage rates falling. Well, I think they did this prematurely before the market opened today. Here is why. When we go to the MBS market, it's right here. This number shows the MBS price went down 22 ticks. Okay, so let's unpack this. What is that number? So if you follow me on a daily basis, thank you. Please don't forget to give me a thumbs up on this video. You newbies, subscribe down below, hit the bell every time I post a video, you get an alert. What we do here on the channel is we help you understand the mortgage business. So there's realtors, there's financial planners, there's mortgage people involved. There's consumers all over the country that watch. They're like, okay, what's going on with mortgage rates and why? The biggest thing is why. And is your mortgage advisor following all this stuff that we do here at the Frio team to make sure you're locked in at the right time? So let me break down this information. We follow the mortgage-backed securities market meticulously. Why? It's the biggest component in your mortgage rates. So what happens with bonds is as the price goes up for the bond, the rates come down. When the bond goes down in price, the rates go up. Okay, so that's just take that for what it's worth right there. So let's dig into these charts that I have and that we follow. All right, and it's right here. This is what's happening with the mortgage-backed securities. Now, there's a lot of technicals in place with all this stuff, but if you notice here, we had a nice little rally back, a couple months ago, and then the Federal Reserve came out, and there was fear of inflation. That was right here, and then the mortgage rates went back up. We stabilized, then we went back through, and then what happened here? Well, the Federal Reserve came back in, had another meeting, and the fear of inflation and interest rate bumps by the Fed kind of roared its ugly head. And then we had, look at this rally right here. Okay, this is nuts. All right, so what's coming into play right now are some technical levels. And we have these lines here. These are called what we call Fibonacci levels. Okay, these do serve a huge purpose, and I'm going to show you how, what, where, and when. If you go into this, you can see that Fibonacci levels basically create a ceiling and a floor when you're charting, and they do serve a main purpose. So what happens is when prices or yields get to certain levels, they hit these Fibonacci levels, and that is a resistance level. So you can see here, we hit it and stopped. Here we hit it and stopped. Here we hit it and stopped to a T. Same thing here. All right, and then kind of we blew through that line, which is great. That created another technical. Okay, so that's what happened here. And then all of a sudden we had a reversal. Why this reversal? Especially because there is no economic news out today. Okay, so what happened? Well, let's dig into this a little more. When you're buying bonds, when you're buying any investments, you have options. So in the bond market, you basically have treasuries, corporate bonds, and mortgage-backed securities. All right, so as the 10-year treasury starts to move, it also affects, in a ripple effect, the mortgage-backed securities. So this 7 basis points is a kind of, I won't say a substantial move in the mortgage-backed or the 10-year treasury, what's going on with it, but it's the only thing that happened today, or it had a nice little run, that is affecting, or is probably what is affecting the mortgage-backed securities market. So let's go into that chart, and I can show you some technicals there. If you look right here, we hit this Fibonacci level right here, and we didn't hold, okay? And then we kind of bounced off of that. So what's happening is traders on Wall Street, they're saying, well, I already made a substantial profit in mortgage-backed securities, and I'll show you that in a second. But the technicals on the 10-year treasury just aren't not making us happy. I'm trying to make this as simple as I can. So what happened there is they started selling, and the price has to move in accordance with that till there's an equilibrium. I know I'm probably confusing the heck out of you, and I apologize. I don't mean to, but that means more people are pushing their money into 10-year treasuries than mortgage-backed securities. And why? Is because this rally here, again, remember, this is the price of a bond. The price is moving up and up and up and up and up. It's like a stock. So it moved up substantially, almost 100 basis points over the last 2 weeks. A lot of traders are saying, okay, this move is a little fast and a little much. So we're going to pull some money off the table. We're going to sell some bonds, and we're going to move it into 10-year treasuries. Okay, that's what's happening. So I don't see this being long term, nor does, you just heard from the CNBC financial analyst, the same thing. Okay, so let's see what's happening today during the day. Okay, we came out of the gate and was steady, 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 and then all of a sudden around noon, everything kind of plummeted off. All right, so the only thing I can think of is a long weekend. Some people, they took some profits, they moved monies into the treasuries, and then they went away for a weekend. And that's basically around noon. You can see it right there, noon on the dot. It kind of had a sell off. What these red candlesticks mean is there's more sellers in the market for this investment than buyers. And you can see we see it all throughout the day, and the market is still open right now. And we still have heavy trading on the sell side. That's not a good indication. But again, if we didn't have this big rally, I would be majorly concerned. But we hit a new resistance level here, and we're a little bit overbought at this time. So that's why I'm thinking, I always said we should be about the 103.8 handle. and we're at 103.67. So we should be moving back up to the 103.8 handle probably in the next couple days as of next week. All right. So that's what's happening on the bond market piece of things. Now let's look at the economic calendar. Nothing. All right. So there's nothing right now today that should have affected the market, but we did have, we did have a little bit of a collapse here, and it's basically due to the 10-year Treasury because there's no economic data out. So what's going on with mortgage rates? These rates are published as of yesterday. So these aren't updated today. So you don't see the 3% or 2.99 rate that's out there. But what Black Knight does is they surveyed mortgage lenders all over the country, and we post back what our rates are on some specific areas that they give us a questionnaire on. This that we follow is the 30-year terms on conventional, jumbo, FHA, and VA. So this is where not my rates, not any other specific lender's rates, but this is the average out in the country right now. Okay, so that's where things are. The 1-day delta, 7-day delta, and 4-week delta. Delta means change. So 1-day change, we had a 3 basis point reduction from yesterday's rate. Okay, what's 3 basis points? Well, it's 0.03. So that means, let's say, for example, let's take the jumbo. 3.06 is the average rate out there right now. It's 2 basis points different from yesterday. So that means this would have been 3.08 because it dropped 2 basis points. All right. So it goes across the board. You can see basically on a 1 day, nothing really moved. You need about a 10 basis point move on any of this to really affect rates. So you see the 7-day delta, no big changes there. The 4-week delta, actually the only changes here, the biggest changes in the VA loans. All right. So that's how mortgage rates work, what's going on, and the economic data from me as well as Yahoo Finance. So if you'd like to learn more about me and my team, how we can help you guys, here's what I'm reaching out to people right now. There's over 2 million people still in the forbearance program. You guys need an exit strategy. What's your mortgage lender going to do once your forbearance is up? And many, many, many are coming due within the next 60 to 90 days. So please be ready for that. Call us, consult with us. Let us give you all the options you have available to you. And then you guys pick the best way you think is best for you financially and for your family. The next thing is if you're building a house, most builders will only lock you in for 60 days. So if you're concerned about what rates are going to do 3, 4, 6 months from now, please let us know. Why? About half the country, we can lock in your rate up to 1 year. Okay. The biggest benefit of this is lock in now because you have a one-time free float down. Meaning, let's say we get into October and rates just plummeted, but we had you locked in. Do you lose out? No, because what will happen is we'll float you down to the new rate at no cost to you guys. We'll take that. So you have a one-time float down, and we'll help you monitor that. If you're looking to buy a house, we have realtors all over the country that we work with. I just talked with 2 in Texas this morning, in Houston, the Houston area. Fantastic group of people down there, and they're just killing it. I mean, they're selling homes left and right, and they need our help. They reached out to us and said, Dan, how can you guys help us get on YouTube? How can you help us get out to more and more people to buy and sell their homes? So I'll be posting that probably once a month. The Houston, we'll have a Houston update, and we're trying to do this all over the country. So if you're a realtor out there and you'd like to partner with us to get on YouTube and get some exposure out in those areas, please let us know. We'd like to help you in those areas and partner up all over the country with realtors. So when you and us find people in your area, we can collaborate that together. If you're looking to refinance, like the CNBC analyst or the Yahoo analyst said, if you're locked in, if you're a homeowner, refinance, because you're probably looking to save $300 a month on your refinance. And we'll work with our YouTube viewers to help cut down your costs when you're looking to refinance. Okay, so that's that. We have technology that is best in class, and it improves every day. And I'm going to show you that here in a second on our website. But to find out more about me and my team, please visit our YouTube channel, and it's right here, The Rate Update with Dan Frio. There's over 900 videos, and we're closing in on 15,000 subscribers. There should be something there that kind of tickles your fancy. If not, give me some ideas on what you want me to do. And I'd post a video. I'll put a video up there in relation to what you're looking for assistance with. Our new website, really cool. You can hit apply now. All of this now is synced with our computer system. Okay, what that means to you, As you're putting in data here, it automatically syncs with our computer system that we can correspond with you either by mobile app or through this. You can text us. We can partner in your realtors. We can do all kind of things with this. We can get you pre-approved within probably an hour. We can send you your pre-approvals through this website. You can print your own pre-approvals. You can adjust the amounts that you're pre-qualified for, and much, much more. How you do that, you just go to the Apply Now tab, you click it. What it's going to do is it's going to open up all of our team members. If you want to deal with me, click the Apply Now button here. If there's somebody else here that you know and you want to deal with, by all means, click them. These are all my loan officers. And you can find a whole thing of that on therateupdate.com. And you can hit the Apply Now button. What the Apply Now button will do is take you right to this site. You're familiar with that if you're watching my channel recently, that we have. If you're looking to buy a house or refinance, you click it here and you are on your way. I'm going to keep it simple and short. That's where we are today. I'll be back Monday with some more data on rates, where the economy is going, housing's going. And so other than that, TGIF guys, God bless, take care, and I'll see you next week. Bye-bye.